The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 9th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, if you can't send me if you can't give me a call, you can always send me an email, steve@tfnn.com. And inside the Tiger's Den, well, any ping will do, Vasily. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 61 points at 22,024. S&P is off 4 at 2471. NASDAQ 100 down 18 points, 0.3%. That's trading out at 5908. The Russell 2000 off 10 points. The transports are up 5. Something to think about. You've got gold trading up $15, silver up 45 pennies. That's nearly 3% to the upside. Light sweet crude up 17 cents, leading the charge here. To the upside, individual stock-wise, you've got Charter Communications up $10, Cimarex Energy up 7, Intuitive Surgical up 7, Green Dot Corp up 6, Regeneron Pharmaceuticals up 6, Two Cows up TCX, the ticker symbol, up $6 out there. To the downside, Priceline.com. Hey, when you're $2,000 stock, you can handle $149 decline to the downside. That's off 7%. Tesaro down 9% or $11. Barrett Business down 9. Jazzy one. The Jazz Pharmaceuticals off $8. Transdigm Group down 7. Amazon down 7. So there's plenty to look at. Of course, I want to look at what you want to look at. Don't have any questions at the moment, so let's just go take a look at the general markets. Try to figure out, okay, so what are the markets doing here? If we were to take a look at the equity futures contracts, that's where we'll start. We'll look at the 30-minute time frames out here as soon as they populate on my screen. We'll start here by taking a look at the NQ. We'll look at the NQ 30-minute chart. Now, you know this. You picked this up earlier this morning. I know you did. For those of you that trade intraday, for those of you that trade this, you knew that when the NQ was moving lower, doing less relative energy, you were like, hey, I know what the market is going to do. It's going to bounce or bottom. Why? Because this is a pattern that is present at tops and bottoms inside a market, no matter what time frame it is that you trade on. The one thing that you and I have that is an absolute competitive advantage, and I don't mean absolute, I mean absolute. Absolute. You have a competitive advantage over every single financial news analyst out there because you know how tops and bottoms are made. You know what a bear market looks like. And isn't that a beautiful thing? Because everybody out on the boob tube, they can talk about all kinds of stuff, and you just say, hey, I can just fall back on my patterns, see if it's present, and then say, I don't think so. Now, we see these same patterns on these intraday charts here. And when you see the cavalry arrive, which it did, it tried arriving a couple different times. There was one final push to the downside, but that was your biggest reversal signal inside the NQ at 10 o'clock this morning. In other words, if you didn't believe it at 9, And if you didn't believe it at 6:30, you most certainly believed it at 10 o'clock this morning. Why? That was a big old wide-ranging bar, big old bullish engulfing candle, big old key reversal session. It had everything. So now the bounce is underway. Does that mean that on a daily perspective that a bottom is in? No, it does not. It means on the 30-minute chart that there is a bottom that is in. What we do know is over the course of the last hour and a half, right here at about 12:30 specifically, there was a 3-candle formation. That's the 3-river evening star. As we speak right now, that becomes your resistance point. So should you see the NQ trade above, I don't know, it looks like about 59.17, give or take, then what price will do is make a run for the previous high from yesterday's high out there, probably up into the 59, 57-ish type area. Could go higher, but that's what you would be looking for. Now, it wasn't just happening inside the NQ. That party had RSVPs for the ES Mini. It had an RSVP. Here's the ES Mini chart. Now, in the case of the ES Mini chart, this only had one signal. Didn't have multiple signals. It showed price was moving lower, doing less relative energy. It showed the cavalry arriving right here at 6:30 this morning. Yeah, it was tested, but it was rejected on those tests of the lows. And it has that same evening star formation. Now, a little bit more resistance when we take a look at this ES Mini chart. You can see Stevie's green dash line out here. If price gets above that 24, we'll call it 24.70, 150, 24.72, then price can run all the way back up to the highs. At this stage of the game, it's just a counter trend rally on this 30-minute time frame. And as I say, the same pattern was present inside, it was inside of the Russell 2000. It was inside the weak link inside the market. So if you didn't believe your eyes on what's the strong dog, if you didn't believe it on the ES Mini, the larger piece of it, hey, you had to believe it when you took a look at the Russell 2000. It is the weak link out here. Now, the Russell 2000 really hasn't had much of a bounce. It hasn't taken out resistance. We call resistance right around the 1403 level. Of course, what you and I would do from here, if we were trading this on 30-minute time frame, we would do that, right? We would make sure we know what our P's and Q's, but really our TAS, we would know what our TAS profile levels would be at on some multiple time frames to understand other areas of support or resistance. Now, that is what's going on the intraday time frame. So what's going on the larger piece of the pie? Well, let's go take a look at the daily equity futures contracts out here. And what you're going to see, we'll start with the NQ because that's what we started with on the 30-minute time frame. Is there any problem in the market? The answer, positively, is absolutely not. All price has been doing for 2, 4, 6, 8. Today is 9, number 9. It's just been moving sideways, been moving with inside a range, courtesy of those TAS market profiles. You needed to know that as price was making that price relative strength divergent pattern on the 30-minute chart, price was trading right down into support on the daily chart. Now, folks, that is what we call a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, you know what we were able to do? We were able to spot, certainly on the intraday charts, a 30-minute time frame, excellent time frame if you're trading the equity. Hey, it doesn't matter what you're trading. You know, if you're trading these markets, if you're paying attention to, if you're trading the volatility index as an example, one of its, horrible vehicles, but you're just doing it intraday, you certainly want to be able to have access to what's going on inside the equity futures contracts. You want to make sure that you're familiar with these patterns because they're the ones that really answer all the keys. If you're trying to put together the Rubik's Cube for the market, we give it to you right here each day between 1 and 2. Actually, we do it at TFNN between 9 and 5 to 6 or what have you. You know, if you put together all those pieces of the puzzles that each of the great hosts here provide to you, you will be light years ahead. You'll have a set of tools that you're going to be able to use forever. Now, the cool thing here about this chart that you and I are looking at, which is the equity futures contracts, the TAS market profiles, is we can clearly see the lines of demarcation. We know where support is. We know where resistance is. So let's just say that you were the type of person that wanted to really sell into this market. Where would be on the NQ, where would be the spot to sell it? The spot to sell, there'd be 2 spots, right? One spot would be, I give you 3 spots. One spot, the ideal spot, if that's what you were inclined to do, would be 59.60. I'm not saying that's what you should do. I'm saying if you were inclined to do that, you would do that. Why? Because what we know is that the NQ has not been able to bust out the lows. If you can't bust them to the downside, you know what Obi-Wan Kenobi will say. It's going to try to bust it to the upside. Now, the only thing that can get in the way, well, there's many things that can get in the way, but one of the things that could get in the way might be that point of control, 59 1/4 at 59.02. So about another 23 points to the upside. That could be a spot. Am I suggesting you do that? No. Hell no. I'm not suggesting that at all. But what you do want to use are these profiles are wonderful tools. If you take a look at the ES Mini as an example, price has never gotten down to test the bottom of that box. That's 24.54. It's getting close to the top of the box. You're 24.67 and 24.72 is the number. If price closes above 24.72, you want to have some good pattern out there that tells you where it is that you should go ahead and take that short position if you are so inclined to do that. Inside of the Dow, hey, best of luck to you. There's really no data here inside of the Dow on this chart that would tell you to go short the Dow. You'd have to be using something else. Now, I can't control what's going to happen next, but what we can do in this game of strategy, Stratego, is we can line up the levels of support and resistance. The other place inside the NQ where you could go ahead and get shorty, so to speak, would be a close below that 58.73 level, 58.72, because you will now then know that a key level of support has broken. But as far as right now, this very second, you'd have to have some other good reason. Now, I can probably provide you with the good reason. Maybe we'll go ahead and get there. Hey, maybe we'll go ahead and get there right this very second. There is a key level out here. It's 59.06. At least Steve-O thinks it's a key level, 59.06. And that is a spot where I can see the aggressive trader at an intraday basis. If you're a day trader, a swing type, not day trader, if you are trading from a swing point standpoint, but no, don't do it. Please, don't do it. But it would be a spot. And they have good reason to give you that as a spot out here. But otherwise, the Dow still is in bullish mode out here. Now, if we take a look at some other, in trying to truly unravel that Rubik's Cube, you know there's more than just one color on that cube. And so that means there's more than just one indicator that you and I have to take a look at. If we go take a look at the advanced decline oscillator readings here for the New York Stock Exchange, NASDAQ Composite, and Dow, you're going to see they're all below zero. Now, the one that is of interest, most interest to you, most interest to me, is one inside the New York Stock Exchange. Right now, the reading is minus 147.35. We'll go ahead and blow up this chart on the screen. And when I say blow it up, you know what I mean out here. And you're going to see a plus 150. You're going to see a minus 150. Right now, we're at minus 147. We've been down to minus 153. Might have even gotten a little bit lower than that during the day out here. When you get down to the minus 150 area, it's typically where the market generates some type of bottom. Yeah. Some type of bottom. Can it get below 150? Yeah, of course it can. Below minus 150? Yeah, of course it can. You're looking for some type of pattern, some type of signal. This chart here takes us back, I don't know, how far do we go back on this chart here? Into February 2016. So about a year and several months, right? 15, 16 months, something along those lines out here. And if you take a look back in February 11th to be specific, of 2016, you were right down to really the closing reading back then was, well, what was that reading? What was it? Minus 135.74. Hey, close enough for our game out here. And that certainly formed a bottom. If you take a look at a bottom that formed out here April 7, we were down at the minus 137 area, formed a bit of a bottom. We got through that minus 150 back here on May 19th before there was a turnaround. That was at minus 203. You can see along the way here that this is, and the New York Stock Exchange, for goodness sake, can you believe what it is that you are saying right this very moment? You're saying after, in essence, 1 day of decline, 1 day from when it made a new all-time high intraday, that right now the New York Stock Exchange is down at those levels where it typically forms a bottom. You want to keep your eye out here. Now, you already knew this. You already knew that it was sometime last week, I don't remember the exact day, when the advanced decline line hit a new all-time high, and you know that that is not how bear markets begin. So for all of you grizzly bears, it just doesn't happen that way. That doesn't mean we can't have a decline. That doesn't mean we can't even have a correction. 10% or more, something like that. After all, when was the last time that we had a correction? When was it? Do you know the last time that we had a correction? Well, let's go find out. I think I've got a chart that will take a look at that. Here's the S&P 500. That's what I'm really referring to. And the last time we had a correction, something more than 10%, utilizing the standard terminology that is out inside the industry, was back in May 2015 to February 2016. We saw from high to low a 15% drop. We may not have seen it from close to close, but we certainly saw one from high to low out there. And in my book, that's what we will go ahead and work with. And on average, the market has one of these corrections every single year. So if that was February 2016, and we're now in August of 2017. I get why people are looking for some kind of top, because we're really overdue. The last bear market, many people think the last bear market was in 2007 to 2009. And I would say you're dead wrong, because the S&P had a bear market. And this was a quick one, because this was after the 2009 bottom, the 2007 top. Well, sort of, right? 2007 to 2011. That's actually about the pace that we had been seeing over the course of the last century. Been about one every 3.5 years out here. And from May 2011 to October 2011, you saw a nice little 22% drop. Over the last 70 years, it's been like about one every 5. Hey, add 5 to 2011. Yeah, guess what? We're a little bit overdue. But, folks, there's a pattern present at each of these. It doesn't matter whether it's the bear market or there's a correction. There's one of these patterns that are present. It's the same pattern you and I looked at that formed the intraday low this morning. It is not any more complicated than that. Steve Rhodes, team. You're right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Now, look, I heard somebody out there before we went to break, and somebody said, Steve-O, it cannot be that easy. But what if it were that easy? What if it really were that easy? And because that would shut down a lot of the you know what I was going to say, garbage that we hear in the fear factories and all that type of stuff, just to keep you posted. Hey, I want to keep you posted. I mean, I want to keep you, tuning into the show every day so that we can go through this stuff and get a feel for where something's going to answer your questions out here. And it's just, folks, that when you do the work, when you open up your eyes to what the most fundamental element of investing in the markets, which is doing technical analysis, it just is a mind blower, especially when you go back, as I did, to 1896, and when you start to take a look at every single bear market that is out there and the pattern that was present. We don't have to worry about whether something is retrograde or not, whether there's a full moon or not, whether there's a new moon or not. And hey, I love those things too. But what we really want to know, what most of us want to know, especially with regard to the retirement portfolios, is, hey, when am I nearing trouble? I could give a hoot about what the valuation is and whether it's fair or it's not, and whatever the CAPE factor is. The question is there any CAPE factor out there that identified a market top for you? And is that a consistent pattern? And the answer to that question is no. But the pattern that is present when any bear market begins is price moving higher, doing with less relative energy. And hey, you need to know your P's and Q's. You need to know your bullish and bearish candlestick signals out there. And here's an example of the most recent ones inside the S&P 500. Hey, look inside the S&P 500 right back here in 2000. You can see Stevie's dark lines out there that were drawn at the tops. The same thing out here in 2007. And you take us to, hey, where are we today? Do you see that pattern present right now? The answer is no. Does that, and look, with regard to corrections, we see these two now. We want to take a look at daily charts as well, because they're, again, different time frames. But really what I'm speaking to right now, each of you out there, really with regard to the long-term aspects of, hey, I got an email just yesterday from someone that said, hey, I am full of, and it was actually right, because I'm a little stuffed up out there. But it was with regard to the belief that the S&P was going to go ahead and head back down to 666 or something like that. And maybe it will. But it won't do it until we see this pattern present itself out there. Hey, I don't need to get into those types of prognostications where something might go to. What we do know in solving the Rubik's Cube of this markets is the pattern that is present. That's just in the S&P on a monthly basis. Again, we're taking a look at the monthly charts out here. Here's the Dow. Same thing inside the Dow. The same patterns inside the Dow. Where are we now? Hey, on a monthly basis, we actually have a gap to the upside. Yeah, we have a gap to the upside between last month and this month. Is that a bearish pattern? Not that I know of. Not that you know of out there. Doesn't mean the market can't pull back. I'd love for the market to pull back out here, wouldn't you? I mean, that's the beautiful thing. The thing is, when you start taking a look at this New York Stock Exchange as an example, and you start getting down to the minus 150, and you realize really only one day, because we've been going sideways out here, and so that advanced decline information is what really gave us this reading down here on the oscillator down around the minus 150 level. You got to say, man, if you're a bear out there, you got to go back into hibernation. Long-term bear. Intraday stuff, that's a whole different animal out here. So that's what the New York Stock Exchange is doing. I know that Tom had written in, and he was by asking about the TVIX out here. And this is real important stuff, I believe, for you. Totally get your head wrapped around, because I know you listen to this show and other shows out there. And the idea is the KISS method. Keep it simple, Steve-O. Right? And when you can keep it simple out there, then it makes it a whole lot easier for you to rest your head on a pillow. And hey, what could probably put an end to that? Yeah, I guess global thermonuclear war. Do you really believe that that's the real issue that we are facing in this country? Do you believe that's the biggest issue out there? I don't. Not that it can't happen. I think that is not the big issue that is out here. The bigger issue is how secure are our networks, the networks that you and I attach to, the financial networks, not the television networks, but the financial network, the computer. Can you try living without your computer and doing this stuff for a period of hours or what have you? Yeah, that's a bigger issue, in my opinion. That's a bigger issue than, Kim Jong-un or what have you. Not that he's not an issue, not that I'm underplaying that, but our biggest issue is not the crap that is being sold to us on the boob tube out there. Okay, with regard to the VIX index out here, and if we take a look at Tom is asking, hey, I was long TVIX today, bailed out this morning, and just bought it back at 1703. What are your thoughts here? So with regard to the volatility index, how are we going to answer Tom's question out here? How are we going to answer that? You know, since it's based on the S&P, Tom, I think what we'll do is just simply switch back over and go take a look at the ESPN. I think, okay, so you're in that trade. What are you looking at that would get you out of that trade? I would really think would be the question that I would be asking myself. And so we sort of covered it. Probably sort of covered it before your question came in. But just to repeat, if you were to see, as an example, the ES Mini close above 2472 on this chart, that would say you probably shouldn't be in that trade. That would say the volatility index should continue to pull back, or the futures contracts, right? You're not even really. It's not about the spot volatility index, is it? It's really about the two equity futures contracts that you're really trading there. But you know, if you're going to gauge it off of that, I would say a close above 2472. You got to start saying, I don't think so. Now that is level number one. Let's go take a look at the ES. Let's go take a look at its TAS profiles out here. So 30 and 60 minute, really confirming that same figure of about 2472. Now, if you see a close above 2472, what you will likely see is a move up to 2476. And quite frankly, a move above 2473 is big. And it's big because that happens to be the top of the daily box out here. And if, in fact, the ES, and I don't know whether it's going to close above it or not come the end of the day, but if it does, the odds favor that the ES Mini is going to go ahead and make another run for its high. What's another level that I would be watching? I'd be watching Stevie's red line in the ES Mini. That's 2479. So there you would have just an absolute go, no go, and that would say no go. So you're in it right now. It sounds like you made some money. You go ahead and you stay in there. And you hope for the best, and you just have some different bailout levels. Now, inside the TVIX specifically, you know, we can go take a look at it, but it is primarily going to, and I don't know if these profiles that I provide to you are going to do you a lot of good or not, but we're going to put them up here on the screen. And in the TVIX, this would say that if you close below 1755 today, not a good deal, because it probably heads to 1574. So, Tom, thanks for writing. Thanks for, hopefully that helps you out. And Steve Rhodes with TFNN. Be right
back. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Phil inside the Tiger's Den says, Steve, Tesla, TSLA, is approaching the 0.786 retracement of the last down move on the daily. Opens up an A to B equals CD up to 450-ish. To 450-ish. 450-ish. Okay, let's go take a look at it. So if we look at the A to B equals CD, Phil, what time frame is it that you were really looking at here? And you can go ahead and type that in. But let's go take a look at Tesla and see what it is that we know right now. Now, this chart here, and I'll start providing this for you, and I've always had it. I don't know why I didn't. But whenever anybody asks about a stock, we're going to go and be fairly thorough with regard to doing the analyzation of it. And this chart here is going to show you the daily, the weekly, and the monthly, because many times you don't actually write in and tell me what time frame it is that you are, that you're looking at or trading, investing, and so forth. And so this way it gives you, key levels of support or resistance in a glance. So what we know here, as Phil has identified, is on a daily basis, the stock is above its daily profile. Phil, what we now know as well is that this 386.99 could be a stiff resistance area on the weekly chart. You're at 367.58. Pretty decent chance that it'll get up there. It needs to clear probably where the bears last stepped in candlestick-wise was at about 371.74. So if you get above that, it's going back to 386.99. And 386.99 happens to be the monthly TAS market profile as well. So to get to 450, it'll get to 450. I'm going to assume you've done the A to B equals CD out there, and which you have. That becomes, and you'd obviously like to see it blow through the swing point, which would be with more than about 6.5 million shares or so. Then you'd have a confirmed move up into your 450 area. But maybe some tough sledging to get through 386.99 out there. If I take a look at that daily chart, you saying you're coming off of February 27th out here, so I see that. And the only real way to measure that is going to be to watch as price, if it does, get up to that June 23rd, June 26th high. And you really want to see it get through there with 6.7 million. But anticipate that as a pilot, the oxygen mask could fall down. Tell you to put in some oxygen as you get up to that level. Right now, it's somewhat of, actually, the bell just went on. Because you said it was at the 0.786 retracement of that last move. So that's a normal area where people get off the elevator. And really you want to see how it gets over the trading session from the day of June 28th out there. You get over that, then you continue to have some chances. Is this a sell No, folks, it's not even close to a sell. There's no sell signal pattern that is in place. You're just simply running up into some areas of resistance. So that's what I see on Tesla, and so it looks like the same thing that you see as well. So I don't see any other requests out here. So we've covered really the equity markets probably enough that you probably, if I talk about them any longer, you're probably going to throw up. So we don't want that to happen, or just throw up your hands. Let's take a look at Apple. Hey, let's go take a look at Apple. Let's go back to this chart here. Let's go AAPL and see what Apple is doing. Trading out at 160.86 out here, and that is a beautiful thing. Hey, on a daily basis, way above any TAS market profile. On a weekly basis, way above any weekly TAS market profile. On a monthly basis, way above, or above, we'll say, its monthly TAS market profile, which is 156.65. So it's out at the highs out here. That is a beautiful thing inside of Apple, and just wants to continue moving higher. A to B equals CD to the upside takes us into the 169 level. Now, is that confirmed? Well, if we go back on a weekly basis to the week that began April 27th, there was 420,000 shares, 420 million shares, I should say, 420,000. How about that? 420 million shares. And as that was passed, it was on lighter volume. Nonetheless, that is the pattern that is playing out as we take a look at it. The A to B equals CD to the upside inside of Apple. So headed to 169. Since that has such a nice weighting inside of the Qs, it ought to help the Qs along in their move. That be the NQs as well. Maybe the NQs are back, and the Qs are back, and they're going to go ahead and lift all boats higher. At least that's what it is looking like at the moment. Let's take a look at gold. We should definitely take a look at gold. What's happening in the? Let's go take a look at what's happening in the yen out here. Let me see. Where did I put that chart? I moved some things around so I could pull some things in here, and let's try this. Okay, so let's go take a look at the yen futures out here. I had gasoline up there, so we got yen futures. And we just want to see where this is trading into with regard to any kind of profiles out here. So looks pretty good. Slight problem. Well, let's just take a look at the trend line out here on the, let's say I have to blow this screen up. Let's take a look at a trend line. Actually, now this is good, so you blow it up. And let's choose a red line as soon as we can find that on the chart out here. So if we look at trend lines, you've got that trend line, right? Okay, so that looks pretty good. We got this trend line here. So the yen is potentially longer term, it's a weekly chart that we're looking at, potentially running into some type of resistance overhead. If it clears that, that would be nice and bullish. Now, the daily chart here shows that as long as price today stays above 90.90977, then it should continue on to higher price. The next level or hurdle that it needs to, and the long jump that it needs to get above is going to be 0.9126. Now, the beauty of that is if you see that occur, then the likelihood of gold extending its rally is positive, just simply because of the correlation between those two vehicles. And if we switch over and take a look at Goldilocks and look for its next level of resistance out here, 30 or 60-minute chart says green shoots, no problem. 240-minute chart says green shoots, no problem. Daily chart says, hey, hold your horses. I need you to pay a little bit more in toll fees. $12.7690 is the number. You're $12.7640. Anybody got 50 cents they want to throw in there and get this thing up and over $12.7690? Because if you do, then that's saying that gold should head to the 1293 area, 1283 to 1293 in that $10 chuck range out there. So watch the 1276.90 level. That market profile relatively equally balanced. I'm referring to the daily out here, so it's not giving us a clue as to whether or not price is going to be able to get above that level. But we do know It's up at resistance on that daily chart. You get above it, you've got another $20, let's say, inside of the gold trade. Dow's off 59. S&P is down 5 points. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. 812.80 on the gold contract. Somebody put some more change in that bucket. We've got about 2.5 minutes left here. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing very well. Good to speak to you. Real quickie, the 10-year note futures and yield been real quiet, really, for 4 months. There's a Jackson Hole meeting upcoming end of the month, which I have no idea means something or not. Do you see any reason why yields on that 10-year note, the Treasury yield, would likely rise meaningfully or fall meaningfully?
One pattern, and that is this chart right here, and it's with regard to yesterday's. It's with regard to the activity over the last 3 days. And on this chart here, you can see my little oscillator and change line up at the top. It's got a measurement of 227 right now. And down below is the price oscillator. The top line here is telling me whether that price oscillator is rising or falling. If price is below it, it says the price oscillator is falling. Now, when a price oscillator falls below zero, which we haven't seen it below zero for a while, last time that it fell below zero was back right around the 30th of 2017 in March. And yesterday and the day before was what should have happened as you approach the zero line. Price needs to come back to that red line and kind of test it. And what we have seen here is a clear test and rejection. In order for Treasury yields to say that they want to go higher, price has to overcome that level, 227, and then turn that price oscillator up above zero. Then it would give me the outlook. You're headed back to about 237. If it continues to fall, it says you're headed to about the 214 level, 210, 214. So even though it's been quiet, there's a real clear message out here that says the 10-year yield should continue to fall. Sounds like we're out of time. I'm sorry about that. Hopefully that helps you out, John. As always, good to speak to you. Folks, stay tuned. David White is up next. After David White, we got Tom O'Brien from 3 to 5. Have a great Wednesday. We'll see you on terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar